I bought a new stock. I'm so excited. I've been waiting to buy the stock for a long time. We had quite the week with DeepSeek, created a buying opportunity. So I will introduce to you my new stock. I bet you guys can guess it though. I will also talk about Microsoft's recent dip and some concerns that the market has on Microsoft, and my main watch list stock now that I have on that list, and that is Uber. So we got a lot to talk about. Let's start off with the stock I bought. Now, earlier this week, Chinese AI company DeepSeek created fears and sunk the market. It was a crazy day, but I kept my emotions suppressed and leaned in on my analysis and common sense. And emotions are hard to avoid, but you have to do it because it causes you to make some poor decisions. So I bought a stock that I've been watching like a hawk, and that's ASML. I'm very happy. I'm very bullish on this, and it's already performed well for me in just 1 week, which you're going to see my portfolio here in a minute. Now, this was a buying opportunity, one of those rare occasions that happen, and I hope you took advantage of it too, because it was a quick recovery afterwards. So if you did take advantage of it, let me know which you ended up buying. Now, I've covered ASML in detail in other videos, so I want to just simply highlight the main reasons why I bought this stock and why I have zero fears with DeepSeek, actually quite the opposite. I think it's going to be a great opportunity for ASML. So the first reason why I bought ASML is that they play a critical role in the semiconductor industry and is a key player with significant growth potential. Now, ASML sells its EUV lithography machines to chip manufacturers such as TSMC, which uses those machines to produce chips for NVIDIA and Apple and other tech heavyweights. So you have ASML at the top of the pyramid, and then the manufacturing process goes from there, but it all depends on ASML. That's why I love this company. They have the monopoly, they have the wide moat. ASML is the most specialized link in semiconductor manufacturing, and ASML is the only player able to scale and commercialize its technology. Basically, ASML has a very wide moat. Even geopolitical challenges won't slow its growth, as ASML announced that their Chinese business market share was reduced back down to 20% from 41%, and they plan on making it a smaller and smaller portion of their revenue, which is great because China's just unpredictable. So while they're doing that, they're also ramping up revenue from all other areas of the world, especially the US. So that's my main first reason for buying, is that they just play this critical role. The second reason is open source AI models like DeepSeek democratize AI, which actually increases demand for advanced chips. The cheaper AI can be produced, and the more widely available AI becomes, the more demand there will be. It's that simple. This also pushes other competitors to keep jumping to the next advanced chip to stay ahead, which ASML benefits massively each time, as there will be an increased demand for ASML's machines. So while investors thought this would shrink hardware demand, it is actually going to do the opposite. Cheap AI still requires high computational requirements. Now, the third reason why I bought, ASML has strong financials. This last earnings, they exceeded revenue expectations. They increased gross margin to an impressive 51.3%, had record free cash flows, and an optimistic outlook for 2025. All beautiful things that we like to hear as investors. The fourth reason why I bought is the advancements in EUV technology from ASML will only ensure this company is central to the future in AI and semiconductor advancements. AI creates a relentless appetite for advanced chips, so the moat of ASML will only widen and their importance will only grow. Now, the fifth and final reason I'm going to share with you why I bought is don't forget that each machine lasts about 30 years and needs continuous calibration, maintenance, and upgrades that companies pay for through service agreements. This is beautiful reoccurring revenue for ASML. So a company will buy a $400 million ASML EUV lithography machine and then pay for these service agreements, which continues that revenue coming in to ASML. It's just not a one-time purchase and that's done. No, the revenue continues through these agreements. So it's a beautiful way to earn money. So these are all the reasons why I bought on this fear-driven dip. You'll see here in this chart, highlighted in yellow, that's the dip, and it's been going up steadily since then, and I got in right at the bottom. I was just woke up that morning, saw the DeepSeek news, saw the stock dipped, and was like, oh, there's my buying opportunity. Now, with their stock price target, they have an upside of almost 20%. Right now, they're about $740 to $50 range. Analysts say by the end of the year, they'll make it to about $880. I think they can do that easily and maybe even surpass that and get up close to $1,000. Now I'm going to share with you my portfolio before I talk about Microsoft or Uber because I'm so excited to share this new stock of mine. And there's ASML. In 1 week, it's already up over 10% for me. Some stocks don't even do that in a year, shall I say. So this is very exciting. Of course, anything can happen. Some news can come out in the tech industry. It could send ASML back down, but that's just another buying opportunity because this company's future is very solid. You'll see Microsoft there. That's the next stock we're going to talk about. They're in the green 75%. That's even with the pullback. So it's done well for me. And overall, my portfolio is in the green, a healthy 36.63%. So let me know if you have any questions on this, but let's dive into Microsoft. They had a pullback, but they also just released earnings. So in their earnings, let's talk about that real quick. Revenue grew 12%. They had a very healthy gross margin at 69%. Net income grew 10%. All great numbers, double-digit growth. And then when it comes to the cloud revenue, it's growing like clockwork quarter after quarter, now at 40.9 billion. Now they did say Microsoft cloud gross margin percentage decreased year over year to 70%. What a problem to have, right? That's a beautiful number regardless, but it's driven by scaling our AI infrastructure. So yes, some investors did not like this. There's some problems with the infrastructure right now, but we're going to talk about that, and I'm going to share why I'm not worried and maybe put some fears to rest. So when it comes to Azure, this number is one that investors love to see. It grew 31%. Now it's slightly below expectations, which I'll share that number in a second, but still very solid. Azure is going to be in a solid second position for some time and maybe even catch up to Amazon Web Services. You never know, but that'll be a very hard feat to do. Now with Microsoft 365 consumer subscribers, this is important because this is one of their main sources of revenue. And it's one of their main wide moat products and services that they offer. That's the Office 365. So think of Word, Outlook, all those things. Their subscribers are growing like clockwork quarter after quarter. This is beautiful to see and should show you the strength of this company. Now, free cash flows did dip 29% year over year, but that is a good thing in this situation because they're investing heavily in AI. That's where that money's going. And this is what makes a growth company, right? They're reinvesting into the company, investing in innovation in the future. And that's what I like about Microsoft. And I know they'll be one of the main beneficiaries of AI in the future because they're already rolling it out. It's already been adopted. Companies, shall I say, are buying subscriptions. But Microsoft shares did slip on weak quarterly revenue guidance. No one likes to hear that, especially from a very strong company, dominant company like Microsoft. So yes, that was one of the main reasons is their revenue guidance came in lower than expected, but also that the Azure cloud business is dealing with execution challenges and ongoing supply shortages. Now, with respect to guidance, Microsoft called for 67.7 billion to 68.7 billion in fiscal third quarter revenue compared with the 69.78 billion consensus. So a little bit over $1 billion below the guidance that they were expecting, and Microsoft would have posted bigger growth in artificial intelligence revenue in the December quarter had the company not been capacity constrained in its data centers. They said demand continued to be higher than our available capacity, and while we expect to be AI capacity constrained in Q3 by the end of fiscal year 2025, we should be roughly in line with near-term demand given our significant capital investments. So they're putting $80 billion into AI. They're going to build these things out, and I do believe that they'll be back where they need to be in order to not have these constraints and get that revenue that we expect as investors. So I think that's a short-term thing. I don't have any issues there. Also, Azure grew 31%, but analysts were expecting 31.9%. So yes, a little bit below. I think it's kind of funny when they nitpick like this. 31% is still awesome, and they're still dominant in their cloud business. Now, Nadella, the CEO, said OpenAI has a lot more coming soon, so stay tuned. So what I see there is he is kind of foreshadowing some big things in the future. Right now we have this dip in the stock due to these issues, but I guarantee you in one of the future quarter earnings, he's going to release some big news around AI, and that's going to boost this stock back up. You can bet my words on that. So Microsoft is also trying to integrate AI into its product offerings, and this has been a little bit bumpy. It hasn't been that popular. People are saying it's just really not that functional yet. And you can think of Outlook, Microsoft Word, PowerPoint. They're integrating AI into those, and they're starting to roll it out to their customers. But for me, Microsoft has the money and the wide moat to make it successful, and that's what they're actively doing right now. And I already know companies that are subscribing to their AI co-pilot subscriptions. And so, yes, as more and more people subscribe, get used to it, and Microsoft is able to utilize that data to improve, eventually it will be at least a solid product, but hopefully a great product. And I think this is all short-term fears. And in 5 to 10 years, you won't care and you'll be glad you stayed invested and kept investing. This is a long-term hold, and I really believe it's going to continue to outperform decade after decade. Now, with its price target, it has a 22% upside potential. Right now, it's in the low $400 range. It has an average of $500 by the end of this year and a high of $650. I think, again, this company will remain probably towards this low 400 range until they have an earnings where they make some big announcements and have some beats on expectations. But there's a reason why I hold this company and will continue to buy it. This company is rated better. They have a better credit rating, shall I say, than the US government. And that's because of their amazing financials and their amazing business model. So this company is very well protected, as well as they're growing, they're investing, they're going down these and chasing these areas of high growth like artificial intelligence. Yes, it may take some time to have the returns that everyone's expecting, but when it does, I think it'll become roaring in all that free cash flow, and that's just a great thing for us. So I say it's a great time to buy Microsoft for the long term. I'm waiting maybe on a dip. It'd be great if it goes below 400, but I'm also not going to stay out of this stock. So I will be buying slowly, just a little bit at a time, unless if there's a dip, because it's been kind of flat for a while. So if there's a dip that happens, I think that's the opportunity, but it's still an opportunity regardless. Now for my main watch list stock, that's Uber. Now Uber is exciting. It's one that I'm considering buying. I think this has a very bright future. It is a higher risk, higher reward, but not as high risk as many think stock. That's how I like to put it. So they have concerns around other main autonomous driving players such as Waymo, who's expanding and already in cities, operating in cities nationwide. They have Tesla, who has been trying to go live with autonomous driving, but they say they'll go live in June in Austin. And you have Amazon with Zoox, which we don't know much about yet, but they're planning on rolling out autonomous vehicles in the future as well. Waymo also said they're going to be expanding in Vegas and San Diego this year. So the fear is that these companies are going to take away from Uber's moat, their ride-sharing app, and get customers and users onto their apps. But I feel like this won't be very easy or successful for these companies to do, even though they're big companies. Waymo, they still have contracts with Uber. So Google owns Waymo, right? And they have contracts with Uber, and they're going to go live in Atlanta later this year with a new agreement. So Uber users will get used to the Waymo fully autonomous all-electric Jaguar I-Pace vehicles, and that means they will be comfortable with it on Uber's app, as they are with the other cities that Waymo and Uber have agreements as well. So people are getting used to it through the Uber app, no other app currently. And Uber said that they are open to talks with Tesla. So just having that open door means that Tesla is going to have to, they can try to go on their own, but eventually they're going to have to take advantage of the massive user base that Uber has. So I think there'll be at least some dipping of their toes into Uber's ecosystem at some point. Now, the main thing is why I'm so bullish on Uber is that they have a massive user base. They operate in over 10,000 cities. And others, I like to think of Google. Google has their search business, others have tried to take away market share from Google search relentlessly for a long time now. Think of Microsoft. But no one's been successful. The revenue for Google search just keeps going up, up, and up. So for me, it's going to be the same thing for Uber. Uber is going to be able to stay dominant. People will try to come in, but it already has the user base. It already has people familiar and comfortable with their app and their convenience. So Waymo, Tesla, and Zoox will want to scale out, and they're going to need Uber for that. It's just that simple. Plus, Uber has many partners already developing this technology. As you can see here, you can see Volvo's one of them. There's Waymo. But even if Waymo stepped out, you have all of these other companies that are helping driving the future of autonomous transportation forward as one. And Uber's going to be offering autonomous vehicles, whether Waymo's on it or not, or Tesla or Amazon. So this is where I see the main benefit for Uber is people, they already have the largest, market share and user base, and they're all going to get used to these autonomous driving vehicles on Uber's app. They're going to have to really get out of their comfort zone to try Waymo or Tesla's app, because Uber does more than just the ride sharing, right? They do food delivery. Now they're doing product delivery, and they're also going to offer something that Waymo and Tesla don't, having actual physical drivers in a vehicle. Some people just aren't comfortable with autonomous driving. I think it's going to take a long time for that to happen. So Uber has the time to build up their autonomous side of things and keep people on their app, because they're also going to have people that want the drivers, that want the food delivery, that want the product delivery. And again, they're built out in over 10,000 cities worldwide. So it's pretty impressive. So this company is innovating with mobility, delivery, and even freight. Yes, you look into this company, they're doing more than what you think. Now, Uber is expanding, as mentioned, into other products that they can deliver. So they teamed up with Home Depot to deliver through Uber Eats. So yes, you can order something from Home Depot through Uber Eats and it'll come to your house. Also, Uber has a partnership with NVIDIA. Bet you didn't know that. And that's to boost autonomous development. And that means that Uber has this thing called massive data, because they have a massive user base. That's why NVIDIA chose them. And data is the new gold. So that's also them accelerating in the autonomous driving field as well. Now, some people say, what about Lyft? Lyft's one of their main competitors too. I see it as one of two ways. Either Uber will eventually erode Lyft's market share, or they both can successfully operate in the same industry. That can happen. Think of Amazon Web Services and Azure Cloud, Microsoft's Azure Cloud. They're both successful in the industry. That can happen. You can have 2 or 3 main players in a certain sector or industry, and that can happen with Lyft and Uber, or Uber just takes over Lyft. So the biggest risk to me, truly, I see is Waymo. I think Google, who owns Waymo, has a lot of users of their own and can integrate Waymo into their ecosystem, right? They have Google Maps, they have their own cloud business, they have a lot of things that they can utilize, and Google has the capability. But I also feel Uber is still the main leader. They were the first to adopt this and will remain so, as they offer the human drivers, as well as most won't be comfortable with the driverless vehicles, like I mentioned, for a while. And that means Uber wins, and they keep people with their convenience and familiar factor. Now, I recently went to New Orleans on a business trip, and I took an Uber from the airport to the hotel. Very convenient. And I got in the car and I just had to ask, because I'm so interested in investing in this company. I said, what do you think of Uber as a company and your job? Now, luckily, this driver also does Lyft. So she's told me that Uber and Lyft both have their pros and cons. But when it comes down to it, she loves her job. She loves what she does and she never wants to give it up. She loves to drive. She loves to talk. And she said, it just fits me perfectly. So I like to see, a happy employee. And it shows me that these people can make a living off of this. I've heard of people making $55,000 plus a year. Just depends on, you make your own schedule. That's also the benefit. So I think Uber just has some unique attributes to it that will keep it popular, not just amongst those seeking a job, but those seeking its services. So I think Uber survives and thrives, and there's a small chance Waymo is able to succeed on their own platform and take away market share from Uber. I think it's unlikely. Now, Uber's stock price target, they have an upside potential of 33%. Right now, they're in the upper $60 range. They have a median of $90 and a high of $120. I think this stock remains volatile until investors come to the realization that this company, with their massive user base, it's already a pretty sticky service that they offer, and it's one that will be very hard to disrupt. So Uber reports on February 5th. And I am debating if I open a position now or after earnings, or just kind of hold off for a while still. I don't know yet. I'll let you guys know. But Uber's been growing in profitability and is becoming a more and more financially stable company. And I really believe this has great potential. So let me know your thoughts on my new stock, ASML. Did you take advantage of the dip with ASML or any other company? Let me know. Do you have concerns with Microsoft? I don't. But if you do, I'd like to hear your take on it. And also, do you think Uber's a good buy, or do you think I should stay away? And please give me your opinion on that, because I don't know everything. You might know something I don't. And I appreciate you all. Thanks for joining today. This is an investing family. We're all here to help each other become wealthy. And before my voice gets too tired, I'm going to sign off. So we'll see you guys next time on Mark Arnold's Finance.